Good evening. This is Ken Long at Tortoise Capital with a review of the daily trading plan for October 13th, 2016. So let's take a look at the reports for tomorrow. Still bullish normal. Just about oversold at the very low end of neutral on a 10-day basis. You can see that indicator right on the oversold line. Still some legit targets here in channeling an overreaction system. ADX increasing its strength of trend with bears in charge. Lots of channeling and overreactions from the ETF expanded and large cap expanded set. Also lots of auto framers. Volatility in the risk index rolling over, favoring the short-term large one-day moves. Lots of good auto framer reward to risk ratios here, and a 551W in United Health. Today's winners: Verizon, Nike, McDonald's, Travelers, and Apple. Losers are Cisco, down 2.3%, Chevron down 1%, ExxonMobil down 0.7%. In the ETFs, silver, gold, real estate, metals and mining, utilities, and treasuries turning in some amazing reward to risk ratios. Key price levels in the auto framer structure. Walmart, interesting here. Treasuries, silver, American Express, 3M, metals and mining, and Win, along with Caterpillar and Home Depot. So a ton of very nice setups ready to go. Same in the regression line fractal framework. On the top shelf in the green are the ones that are on deep discount compared to their long-term fair value, which we say is the RL270. So you have Verizon and Walmart around 7.5 to 8 ATRs below their long-term fair value. Bottom shelf in the red, the ones that are the relative strength leaders that are the head of their RL270 by these many ATRs. So Apple is 9 ATRs ahead of its long-term fair value, excuse me. In the squeezes, looking at Walmart, Pepsi, Win, and Costco. Poised for large one-day moves on the basis of today's relatively small range. So when you almost have this coiled spring effect with the rising lows. Wouldn't surprise me to see that kind of a day tomorrow, which would be very directional and would be excellent for the intraday frogs and the pattern traders. We are right at the long-term average of the slope of the RL30, which is slightly downward. And again, you can see the gradual weakening of price with respect to the 200-day moving average. Just that's an aging bull. Reference data. Latin America on a risk-adjusted basis, still looking the best in terms of Z-scores. Riding the bottom of a declining river. See, the 30 has rolled over, the 90 has rolled over, the 10 is already moving towards the bottom of the channel. That portends another, with 3 all declining, that portends another sharp spike down like one of these. We'll shift to some charts of interest now. Here's one from Charles, looking for ruthless execution at the 1-hour level. So he gets a perfect owl short. An ambiguous move. RLCO outside the river. RL10 crosses the dragon. Dragon slipping down. 30 slipping down short. And cover right at 1R at the Z3 line. Perfectly done. Here's one from Bob, who perfectly timed this owl. Unambiguous move down. RL10 crosses the baby dragon. He gets long. And on hesitation, cashes. Now with this one, I just marked up as a coaching study to show that the size of this nice move from here to here is the size of the leg from the continuation pattern to the RLCO and RLXT crossover, which is almost the size of this move down from entry signal to exit signal, and then re-entry signal going long to the exit signal. So you have this sense that Devon Energy moves in 40-cent chunks on these legs from congestion zone or turning point to the next turning point. So if you can capture 20 to 30 cents worth of price action on those routinely, then you would be well served. I think this was Eric, or maybe Neil. Yeah, he played this trade here from a entry as it's a P5, leaving the river in purple, and then was dissatisfied with the failure to follow through, and so ends up cashing here for just maybe a fraction win or a scratch, practically. We'll just point out that notice the Z3 excursion here on some volume. And then that long, unambiguous move down never really threatened the Bollinger Band mean again. And then this tremendous buying spike right here as it touches Z3. A 1, 2, 3 entry would get you in this yellow zone here. A technical owl would get you here. And so the P5 it trails the SQC and then the 1, 2, 3 entry. But I really like that exit. So just looking at the daily, we're in this 10, 20, 30, 40, 50, 60-day sideways chop and haven't really, we've gone from price level to price level. Has rarely been sustained moves inside there. This is a catch-can market, a hunter-gatherer, as opposed to agriculture. And that's everything I want to cover today. This is Ken Long at Tortoise Capital. Keep your risk measured and powder dry. I'm expecting more of the same tomorrow. Big range move day tomorrow.